The US national debt just keeps climbing, recently topping $38 trillion. dollars. That's not some far off problem for our grandkids to solve. It's a crisis happening right now, growing by billions of dollars every single day. You've probably heard the warnings. Financial experts on the news telling you this debt spiral is a massive threat to every asset you own, from your stocks to your home, and especially to Bitcoin. But what if I told you they're wrong? What if this mountain of debt isn't a threat to Bitcoin at all? What if it's actually the single biggest catalyst that could send its value to heights we've never seen before? Let's talk about a number so big it almost breaks your brain. $38.4 trillion. dollars. If you were to stack that many $1 bills, you could build a tower that reaches the moon and is well on its way back to Earth. This isn't just a number on a screen. As of late 2025, it breaks down to around $285,000 of debt for every single household in America. So, how on earth did we get here? Well, for decades, the US government has spent more money than it brings in. The last time the US actually had a budget surplus was way back in 2001. To cover the difference, the Treasury Department issues debt. Basically, it's the government's credit card. The problem is, they've been swiping that card relentlessly for over 50 years, running a deficit in all but 4 of them. This creates what's known as a debt spiral. As the total debt grows, the interest payments on that debt get bigger. In fact, the net interest paid has skyrocketed, approaching $1 trillion a year. That isn't money for roads, healthcare, or defense. It's money we're paying just to keep from defaulting. This forces the government to borrow even more money just to pay the interest on the money it already owes. It's a vicious cycle, and the world is starting to pay attention. S&P downgraded the US credit rating back in 2011, and Fitch followed in 2023. Even Moody's, the last major agency to hold out, has shifted its outlook to negative, citing concerns over the nation's financial health. It's a major vote of no confidence. The traditional way out of this mess is terrifyingly simple. Print more money. When a government can't pay its bills, it often turns to the central bank to create new currency out of thin air. This process, known as currency debasement, is like a silent thief. Every new dollar printed can make the dollars in your bank account worth less. This is inflation, and it's a huge risk that comes with an unsustainable debt load. So here's where things get interesting. If the US dollar, the foundation of the global financial system, is in trouble, surely that's bad for Bitcoin, right? If the main ship goes down, doesn't everything sink with it? This is the common fear you'll hear from most financial analysts. But they're missing the point. The key isn't the national debt itself. It's the response to the national debt that matters. The government has painted itself into a corner. Its choices aren't great. It could default on the debt, which is unthinkable. It could enforce brutal budget cuts that might trigger a depression, which is political suicide. Or it can take the path of least resistance, devalue the currency. History shows that when faced with this choice, governments very frequently choose to print. They inflate their way out of the debt, paying back old loans with new, cheaper dollars. And this is where the entire story flips. The debt spiral isn't a threat to Bitcoin. It is the fundamental reason Bitcoin was created. The very act of currency debasement, the government's only real escape hatch, is what transforms Bitcoin from a speculative asset into an essential store of value. Think of the US dollar as a ship with a slow but accelerating leak. Bitcoin is a lifeboat. The faster the main ship takes on water, the more valuable that lifeboat becomes. The debasement of fiat currency isn't a risk to Bitcoin. It is the rocket fuel for its adoption. For centuries, the go-to lifeboat for savvy investors was gold. It's tangible, limited in supply, and has preserved wealth for thousands of years. Today, many see Bitcoin as digital gold, but with features that make it perfect for the 21st century. It has a hard cap of 21 million coins, governed by code, not politicians. It's digital, meaning you can send billions across the globe in minutes without a bank. It's divisible, portable, and easy to verify. And this isn't just a theory anymore. The biggest players in finance are already making their moves. The narrative has shifted from a retail frenzy to massive institutional adoption. The approval of spot Bitcoin ETFs in the US back in January 2024 opened the floodgates for serious capital. BlackRock, the world's largest asset manager with over $11 trillion under management, launched its own Bitcoin ETF, and it became an instant blockbuster. Since their launch, US spot Bitcoin ETFs have attracted tens of billions of dollars, accumulating hundreds of thousands of Bitcoin on behalf of their clients. This isn't just hype. This is a strategic move by the most sophisticated investors on the planet. They see the writing on the wall. Larry Fink, the CEO of BlackRock, has directly warned that America's runaway debt could push investors toward assets like Bitcoin as they look for a safe haven from a declining dollar. This institutional demand creates a powerful cycle. As governments print more money to pay their debts, the argument for a scarce, independent asset like Bitcoin gets stronger. This drives more adoption from institutions and even corporations. Companies like MicroStrategy have led the charge, building huge Bitcoin treasuries. This creates constant buying pressure on an already limited supply. At the same time, regulatory clarity is slowly starting to emerge. Various proposals in Washington are aiming to create clearer rules of the road, giving institutions the confidence they need to invest at scale. The conversation is changing from confrontation to integration. Now, let's be clear about what this does and doesn't mean. You may have heard some wild theories about the US government using Bitcoin to pay off the national debt. That's a fun idea, but it misunderstands Bitcoin's real purpose. It's not a bailout for the government, it's an escape hatch for individuals and institutions. The reality is more straightforward. Bitcoin's value grows because of fiscal irresponsibility. It isn't a solution for it. Every new $1 trillion of debt is another billboard advertising Bitcoin's fixed supply. Every credit rating downgrade is another reminder of the value of a decentralized, trustless network. What we're witnessing is a slow-motion monetary shift. The world is gradually moving from a system based on government promises to one based on mathematical certainty. The US debt spiral isn't stopping this transition. It's putting it into overdrive. The decay of the old system is creating the demand for the new one. So the argument is simple. The US debt has reached a critical stage. The easiest way out for politicians is through inflation and currency debasement. This erosion of the dollar's value makes a scarce, independent asset like Bitcoin not just attractive, but essential. The flood of institutional money proves the smart money already gets it. The US debt spiral isn't a threat to Bitcoin. It's the primary catalyst that will drive its future value. But that's my take. Now I want to hear from you. Do you think the national debt is Bitcoin's biggest catalyst or its greatest risk? Let me know your thoughts in the comments below.